and a macro connection there too. Diane King Hall joins us from New York as we talk policy, Fed and presidential and fiscal. It's like any type of input you want right now, you can find it, Diane. And a bunch of the healthcare pharma stocks are getting hit after Robert F. Kennedy Jr. Gets reported as the pick for running Health and Homeland Security, right?
It's true. Even before the announcement was official, you started to see a downdraft hit those stocks when we're looking at whether it's Moderna, Pfizer, BioNTech, GSK, Novavax. All of those took a hit, and that continues today. And they were already having a challenging year for all of these companies, honestly, especially when you look at Moderna. Pfizer, you're looking at now down nearly 5%. BioNTech down more than 5%, Moderna down about 4.5%, Novavax also down about 4.5%. And this on the news that RFK Jr., Robert F. Kennedy Jr. will be the new Health and Human Services head. And he's been notoriously critical of vaccines. Now, he has said that he wouldn't take away people's vaccines. But again, he has spoken out in the past against vaccines. He's been skeptical of them and the use case for them. And these companies have already had difficulties with ongoing adoption of, for instance, COVID vaccines. That's been a challenge ever since in a post-pandemic world. So again, all of these companies, before today, Moderna stock was already down more than 60%. Pfizer was already down more than 10%. So again, these companies have already had challenges. And then, with this new leadership, that presents a new challenge for all of these companies. Now, again, he has said that he wouldn't come after their vaccines, but analysts have more of bearish to neutral views on what this would mean. Wolf Research has initiated coverage of Pfizer today. They initiated before the opening bell. They slapped an underperform rating on Pfizer. Their price target is $25 a share. So again, you're continuing to see that breakdown in the share price today in Pfizer. We're looking at Moderna right now, but we saw that in Pfizer. Jefferies, over at Jefferies, analysts there say they expect to kind of see this anti-vax rhetoric continue, but they said it could not just lead to lower demand, but also could hurt sales. But over at Garnier Research, they believe that this sell-off that we're seeing, it might be overdone. So we will see what ends up happening.
It's kind of a weird thing because on the one hand, it's like, I get the notion that, firstly, it's like we're years removed now from the pandemic where like Moderna stock has already been in this state of malaise. So it's, whether or not it changes the conversation for kind of a sort of a one-trick pony. And again, I know they're trying to do a lot more. I'm not trying to be disparaging about their science, but since COVID, the stock has spoken volumes, right? People trade it as basically, a one-line thing. For the other ones, the bigger kind of, more diversified players, is it really, are they going to prevent people from going to get vaccines they want? I guess maybe, but people also generally feel very strongly about these things, and I don't think it's going to change based on, who's in charge. But if there's actual limitations, then okay. But it does seem like one of those things where people are basically firing, pulling the trigger, and asking questions later.
Yeah, across the board, because to your point about more diversified companies like Pfizer. I mean, yeah. Pfizer has had difficulty for years now. Part of the challenge has been they just don't have that blockbuster like they used to. Even when they came out with their vaccine, they didn't perform as well as, say, Moderna. But Moderna is now on the backside of that kind of performance. So Pfizer has been in this range for years now, lower than what we'd seen in several years previously. But it just has had trouble ever since it lost, its patent on its blockbuster drugs, Lipitor. So Pfizer, you're right. For instance, if we're looking at that company, has a more diverse base, but it hasn't found that, that drug that really kind of propels it like it has in the past.
Okay. All right. So look, big moves to the downside. I mean, yesterday we saw Booz Allen Hamilton and other consulting and hiring firms get smoked because the market's thinking that they're going to take an axe to all the jobs. So it's like a lot of things right now are in the blender, and we're going to figure out how they come out. Lots of questions to be asked, I think, particularly on that one. But like Moderna, Novavax, stuff that's very COVID specific, I could get that because obviously, that's where RFK and others kind of, stuck their, flag in the ground and held. And so it's not like, are they going to come for like vengeance on these companies? I don't know. But, we'll find out with time. Let's talk maybe something a little bit more kind of from a positive standpoint. Berkshire stakes. Everyone's been wondering what Buffett's going to do with the cash. We're getting some answers here.
Yeah, that's right. So we see that he has taken a stake in Domino's Pizza and Pool as well. So this is interesting to see. And Domino's has underperformed the market year to date, but we are seeing shares move higher off the back of this news that Berkshire Hathaway has taken a stake in Domino's Pizza. He bought more than 1.2 million shares. It's worth about $549 million at the end of September when he purchased those. So it's not a huge stake when you compare it to other stakes in the portfolio over at Berkshire, but it is noticeable, obviously, and sizable enough where we needed to get that regulatory filing. He also took a stake in a Pool, ticker POOL. That stake is worth about $152 million. So the view is that we know that they're often that they look for value, so that is what's looked at here. And Pool, we know, has been underperforming, especially Pool had some strong performance when you saw, during the pandemic, all these people, installing pools, but it had pull back in terms of, you had seen some reduction in demand. So this could be viewed as a value play. Domino's Pizza, again, has underperformed the market, but it could be seen as buying up, beaten up at the level that he purchased it at, and seeing, kind of how it plays out throughout this year. Ulta, we are seeing a reduction in that stake. We've already been seeing a reduction there. We know that when that was first announced, that seemed like an odd bet. When it was first announced, Berkshire Hathaway had bought like some 690,000 shares. That was worth about $266 million, but they've been really, really reducing. So now down, they're almost out of their stake in Ulta. And Ulta's had a difficult year, so you're seeing that reflected with the stock down more than 2.5% in response to that.
Yeah. All right. I think the Pool one is the most interesting to me, actually, because Pool's been an overlooked stock on this, not this program, the afternoon program. Mr. George Tillis. We pointed out a few times, it's a pretty interesting stock connected to housing. It's pretty stable. It's a kind of a consumer splurge trade a little bit, but it's kind of been stuck for like the last 18 months sideways. So maybe Buffett will give a little bit of a bounce. Ulta 2, which has been struggling, I find that one a little bit interesting too. It just seems like that stock has kind of fallen out of good graces. And speaking of which, yesterday on Overlooked, we were talking about Sally Beauty. There's a lot of competition all over the place when it comes to makeup.
It is. And the other challenge with Ulta is in Target. Yes, they have their standalone locations, but often in Target, and we saw some, challenges this year with regard to sales and traffic at Target. So that gives you a read through to the challenges that Ulta has faced this year.
All right. Hey, Diane, let's talk Baba real quick. Got to make sure we keep an eye on the China trade down 3%. Give me the 60-second rundown.
Yeah. It is interesting to see what's happened here because in the pre-market, it was indicating higher, although there was some weakness in their results. Mixed bag overall. They beat on earnings. When you translated just to EPS, came in at $2.15 a share. Revenue was $33.7 billion. So what the street has been looking for is, are these stimulus measures in China translating to consumer spending? Because it's not necessarily a direct effect at this point in terms of consumer spending, and there has been softness with the consumer. So we've been looking to these results. We had JD.com. We've got Alibaba today. Next week we get PDD, Pinduoduo. So to see how the consumer has been performing. Their biggest space has been the Tmall. That only grew by 1%. Their biggest growth category has been, on a percent basis, 7%. You saw a 7% growth in cloud. And so you have seen Alibaba try to move more into that space and be less reliant on the e-commerce side. Now, you had both of these players out this week touting Singles Day, which is more than a day. And that's like, as we know, they're like Black Friday. But it was a bigger event this year. We won't get the final numbers on that until we get the next quarterly report card from these players. So.
Great stuff. Very helpful. Thanks, Diane.